The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organization mentioned in this podcast.
Okay, it's Friday the 24th of January. The northern parts of the country are being buffeted by a pretty severe storm. Jeremy, I'll be interested to hear your views on whether the economies of the world are also going to be stormy this week or into next week and what you think's going on more broadly. But good to have you back. And how's your week been?
Yeah, it's been an interesting week. Financial markets generally have not really been buffeted as much as we probably are being by the weather at the moment, despite the fact that this is the first full week of Trump 2.0. I mean, what have we learned? The dollar's weaker. The pound is actually stronger against the dollar by a bit more, so it's outperforming. The S&P 500 is up. And US and UK 10-year bond yields have converged at around 4.6%, which is a big sigh of relief for Rachel Reeves. So we're no longer the outlier that we were looking like a couple of weeks ago. So the pressure is off there. The oil price is quite significantly lower and the gold price is quite significantly higher. It's up 3% in the week. I think overall, the big message is that equity markets were relieved that Trump has not issued any executive tariff orders among the 200 or so executive orders that he issued in the first couple of days of his presidency. And then overnight, while previously saying that he would put tariffs on Canada and Mexico starting the beginning of February, he admitted that he would rather not have to use tariffs against China and that it would appear that the whole issue of China trade policy is on the negotiating table, which I think is a very positive sign. I think he sees the opportunity to exploit China's relative position of weakness to do a deal with China that can benefit the US. And we all know with Trump, it's about the art of the deal, isn't it?
Indeed. And yes, it certainly feels like a less turbulent start than people might have feared in terms of the tariffs or, I suppose, the economic policies that he's talking about. And if he's cleverly using the threat of these tariffs against various countries, he's buying himself a bit of time for those countries to come begging to his negotiating table to strike that deal. So yeah, if that can be done over the next small number of weeks, then that could work out really well.
Yeah, and we've talked previously about how even before his inauguration, the expected arrival of Donald has changed the world order and changed people's behavior. And we know that China has promised more than it's delivered in terms of economic stimulus for its rather troubled economy. And I think the reality is they are waiting to see what the Trump administration puts on the table before they take the next big step in terms of the management of their economy. So I think the setup is for some form of trade deal. Now, doesn't mean a deal can be struck. So there are obviously still risks. But yeah, so far, so good. And after all, we're only a week in. So of course, all this could change in the next couple of weeks.
No, of course. But in the meantime, he's been helping stimulate domestic activity in terms of the US tech industry. Do you want to talk a little bit about the AI?
Yeah, obviously we've had the big headline announcement of this Project Stargate, which saw some of the big US tech names boosted by the announcement of the SoftBank, Oracle and OpenAI 100 billion plus. Well, you never really know with these numbers. I think it started at 100 billion and ended the week at 500 billion. But the project to further invest in AI infrastructure. I think probably the most interesting aspect or new piece of information on this is that it actually provoked pretty swift criticism from Elon Musk, who seemed to object to the involvement of his arch nemesis, Sam Altman from OpenAI in the deal. But despite that, on the announcement, NVIDIA and Microsoft rose by more than 4%. So US big tech is still in the game, albeit these stocks are not really leading the charge in the US equity markets in the way they were in November, December last year. So they're still a feature, but the Stargate thing reminded us that the Mag 7 are the most important corporate interest in the US right now. But I think as a stock market force, they're not leading the charge at the moment. Now, obviously, that can change again, but I think there's a more wider market movement going on here. And then, of course, overnight, we had reports back of Trump's speech to the gathering at Davos. It told the gathering of politicians, bankers, and business leaders what he expected of them over the coming period. Basically, the message seemed to suggest that he wanted there to rethink policies on energy, on regulation, and the priority of economic growth, which, in his view, will enable Europe to contribute more to the cost of its own defence.
It is interesting that his view of good economic growth in Europe is mainly so that they can pay more for NATO. It's not necessarily most people's view of the benefits of economic growth, but, I suppose it's a useful byproduct. So yeah, interesting to hear his perspective on that. And I think I also heard that he was berating the interest rate markets for interest rates being too high. He wanted interest rates to come down as well, and oil prices.
Yeah, he clearly wants to mandate lower oil prices, and to a certain extent, he's had some success in his first week. But I think in terms of his wishes for the oil price will come up against the reality that you just can't turn the tap, particularly on US shale production. You just can't turn up the tap and make it come out of the ground any quicker. And I don't think there's any real evidence that there is surplus productive capacity outside of OPEC right now. That's going to be an interesting dynamic in terms of the extent to which he and his administration might bring pressure to bear on Europe and particularly the UK on what to do about the North Sea and the tax regime in the North Sea. But I think that's for another day. Yeah, and as far as interest rates are concerned, we're having a rematch of his sort of disagreements with Jay Powell from his first term. And, he's quite clearly of the view that he knows more about monetary policy than the Fed, and that he sees the requirement for rates to be lower and much lower. And we can come on and talk about what the outlook for that might be on the Fed decision next week. But there's a gathering sort of rumpus brewing here between him, Scott Bessent, and Jay Powell, I would argue. Yeah.
Yeah. With that one day a month where they turn up and toss a coin to decide the interest rate move.
Yeah. The easiest job in the world, as I think he described it.
That's right. Yeah.
The prospect of Trump 2.0 seems to be having a noticeable impact on the UK Chancellor, Rachel Reeves, as well, who has had seemingly quite a transformation this week. So I say the biggest single thing in the UK this week is that Rachel Reeves has seemingly rediscovered or discovered maybe for the first time a thing called supply side economics. So, in addition to indicating that the Treasury now supports expanding London's airport capacity, which one wag I heard yesterday suggested is to make it easier for millionaires to leave the UK. They're very keen to introduce new measures to reduce environmental delays on planning applications for housing and other infrastructure projects. We've seen that she's keen to intervene in the legal challenge to the car finance industry to support consumer finance interests in the UK. And the UK government, I think probably with Rachel Reeves' backing, has changed the chair of the Competition and Markets Authority and literally appointed a poacher turned gamekeeper in the form of a former Amazon executive to now chair that body. So the idea that they are easing the regulatory environment to support growth in terms of the impact of that and how successful she can be in driving those changes and what's motivating it is sort of a different matter. And it's sort of unclear whether she's doing all this because she's fighting for her own survival, or is it that Trump and his buddies have helped to discover the wonders of supply side economics? I don't know. But what is happening as a result is there's going to be a clear division opening up in the UK government on these issues and the implications, and particularly for energy policy, I would say, and the survival of Ed Miliband in the government.
Yeah, there's that clear dilemma between a push for growth, for further growth across the economy and pushing harder on the green energy policy or renewable energies. It's very difficult to match those two up. So it'll be interesting to see how that debate plays out. But yeah, Rachel Reeves definitely has come up with a number of potentially growth promoting reforms or policies in the last few days. So yeah, hopefully that will continue and we'll see how it all turns out. Yeah.
If she can keep up this batting average for a couple of months, it might make a difference. But at the moment, yeah, we'll see how it goes. The UK economic data coming out, employment rose more in November than was expected, and we got a figure of 4.4%. Average earnings grew at an annualized rate of 5.6%. So I think we're evidencing near-term stagflationary pressures. Growth is difficult. There's evidence that we haven't got our arms around inflationary pressures in the economy. We had some pretty disappointing government borrowing figures this week, albeit Reeves was in Davos saying that the UK finances are now under control and 10-year gilt yields have fallen quite sharply this week. So that has definitely taken the pressure off her. So, yeah, it's a mixed picture, but I think she and the government are under pressure now to provide evidence that they are first and foremost about growth, which is what they've been saying. So what have you seen in the UK this week, Gareth?
Yeah, it's been a very busy week in terms of news flow. I'm not going to go into too much detail on all of them, but we've had a flurry of news from the building and construction sector. And Jeremy, I know you're away for the next couple of weeks, so I might try and get Alistair Stewart in to talk a bit more about the sector and what's going on there. But we had results from Nexus Infrastructure and Watkin Jones and a trading update from Forterra, all of which are quite materially involved in the building construction space. And they were all at least in line or slightly ahead. So there was some good news from that sector. The retail sector was a bit trickier. There was an inline update from Gear for Music, but Sanderson Design Group updated the market, and they've been having some tough times in a number of their markets across a number of different end consumer types. So there's some challenging issues going on in the retail space. And then in sort of tech or related businesses, there was an investment trust called Intuitive Investments. They've got one large asset in China as a big positive deal for them. That asset is a company called Hui10, which is working towards the digitalization of the Chinese state lottery. So it's a huge opportunity, and they signed quite a big deal in regard to that this week. So it was interesting to see. And then we had news from Beeks, who unveiled NASDAQ as one of the clients. They've been unable to name the customer for a number of months now. And then this week, they're able to say that the customer in question was, in fact, NASDAQ. So it's a very, very high quality reference client for Beeks and their trading platform. So positive news from them. And then finally, a business called SRT Marine that we've been keeping an eye on for some time. They had an AGM yesterday with a very well attended and impressive investor event in advance of it. And I think there's an awful lot going on within SRT Marine. So it was good to attend that event and see some of the investors and hear how they're looking to take the business forward. So yeah, been a pretty busy week, really. So looking forward to next week. Anything on the macro calendar that we should be aware of?
Wednesday is going to be Fed rate decision day. As you mentioned earlier, Trump's already putting pressure on Powell to cut rates. And that comes against the reality that the market expectation is for rates to remain unchanged again at this meeting. So that's going to be interesting to see. And I imagine there'll be a bit of heat generated on the back of whatever happens there. Thursday, we're getting a rate decision from the ECB where the market's expecting a further cut. We also next week got various GDP and employment data coming out for the Eurozone and its constituent countries. And then on Friday, we've got some US PCE inflation data, which is described as the Fed's favorite measure of inflation, and core year-on-year rate is expected to remain at 2.8%, which is sort of stubbornly above target. So in the context of the ongoing debate between Trump and Powell about where US rate policy should be, I think that's probably going to be an important constituent. So it'd be interesting to see how all that shapes up. As you say, I'm then off for the next couple of weeks. So look forward to catching up with you in the sort of the next 2 weeks of Trump 2.0.
Yeah, I'll certainly be missing your expert assessments over the next couple of weeks. It's a couple of weeks which I'll have to try and sort of fly, not solo, but with other analysts across the Progressive team. So yeah, we'll maybe keep the economic thinking on that for when you're back. But there'll be probably a backlog of news and information to catch up on. So very much look forward to doing that when you're back from your break. And we'll see you in 2 or 3 weeks.
Okay, look forward to it.
Talk to you then.
Brought to you by Progressive Equity.